Hello and welcome back to the channel. So taxes are one of the most important but often misunderstood aspects of running a business or earning income in the Philippines. So for today, we're going to break down VAT or value-added tax, percentage tax, withholding tax, and income tax so you can understand how these taxes work and stay compliant, especially if you're a small business owner. So stick with me as I also cover some topics like graduated income tax table and options for mixed income earners, and some practical examples to guide you. So before we dive in, my name is Dennis Hilario and I help entrepreneurs and business owners simplify complex financial concepts so you can grow and manage your business with confidence. If you're new here, don't forget to like this video, subscribe to the channel, and hit the bell icon to stay updated on practical tips and strategies to level up your business knowledge. Alright, so let's get started. Let's start with the value added tax or VAT. So VAT is an indirect tax applied to the sale of goods and services which businesses collect from customers and remit to the government. So current VAT rate as of today 2025 is 12%. But who pays VAT? So businesses earning more than 3 million annually are required to register as VAT taxpayer. So here's an example transaction. Say if you sell a product for 50,000 pesos, you'll add 6,000 for VAT, making the total price 56,000. 6,000 is representing 12% of 50,000, and it is collected from the customer and remitted to the BIR or Bureau of Internal Revenue. VAT-registered businesses can also claim input VAT. So these are the VAT paid on business-related purchases against their output VAT to reduce their tax liability. So next tax type is percentage tax. If your business earns 3 million or less annually, you're likely subject to percentage tax instead of VAT. So current percentage tax rate is 3%. So non-VAT registered businesses, again earning below 3 million threshold, is required for percentage tax. Example is if your gross sales for the month is 150,000, you will pay 3% of that, which is 4,500 as percentage tax. So this tax is filed quarterly using BIR form 2551Q. Third tax type is withholding tax. So this ensures taxes are collected at the source. So there are three main types. First type is withholding tax on compensation. These are deducted from employees' salaries. Second is expanded withholding tax or EWT. These are deducted from payments to suppliers, contractors, or professionals based on the expanded withholding tax table. Say for example, if you pay a contractor 50,000 and the withholding tax rate is 10%, you'll deduct 5,000 and remit it to the BIR. Third type of withholding tax is the final withholding tax. This is applied to specific income types like dividends, royalty, or interest. So the EWT table lists specific rates depending on the nature of the payment. You can find that tax table via bir.gov.ph. Alright, but before we move on, if you're finding this helpful and want to dive deeper into business finance and taxes, check out my Accounting Starter digital course. It's designed to help entrepreneurs like you manage your finances with confidence, including topics such as bookkeeping, financial statements, even a tutorial about implementing an accounting software. You may check out accountingcourseph.com or the link in the description box below for more details. The next tax type is income tax. So income tax applies to both individuals and businesses and is computed based on taxable income. Tax rates follow a graduated system. I will flash the graduated tax table in this video, or you may refer to bir.gov.ph for more details. Example like computation is, say you're a small business and you earn 800,000 in gross income for the year. Your total expenses is 200,000, leaving you with a taxable income of 600,000. Also what you call optional deductions and 8% flat tax rate. OSD or optional standard deduction, instead of itemizing expenses, you can deduct 40% of your gross income. So you have to declare this with the BAR during your registration. If your gross income is 800,000, the OSD is 320,000, leaving you with 480,000 taxable income. Apply the tax table and your tax payable will be adjusted accordingly. So if you opt for 8% flat tax rate, this option is available if your annual gross income is 3 million or less and you have no other income sources. You can opt for the 8% flat tax rate, which replaces both income tax and percentage tax. Say for example, your gross income is 800,000, so your tax payable is simply 800,000 multiplied by 8% is equal to 64,000. Now, if you earn both compensation income as an employee and also you have a business income, you'll file taxes separately for each type. Your compensation income is taxed under the graduated income tax table for individuals with exceptions applying. For business income, you can opt for itemized deductions, OSD, or the 8% flat tax rate for this portion. For example, if you earn 400,000 in compensation income and 600,000 in business income, the compensation is taxed per tax table, while the business income allows flexible deductions. Alright, so to recap, again, VAT applies to businesses earning over 3 million annually at 12%. Percentage tax for non-VAT businesses earning 3 million or less at 3%. And withholding tax ensures taxes are collected at the source using specific withholding tax table rates. For income tax, it offers options like the graduated tax table, OSD, and the 8% flat tax rate for eligible tax payers. Alright, so again, if you want to learn more about managing your finances and tax, check out my Accounting Starter Digital course in the link below the description box. So don't forget to like, share, and subscribe for more tips. If you have questions, drop them in the comments and I would love to help. Thank you for watching and I'll see you in the next video. Direction Life and Business. Have a great day.